Hey, what's going on, everyone? Welcome back to This Week Today. First of all, to those who still stuck with their New Year's resolutions, good for you, man. And to those who haven't, better luck next year, man. It's okay. I personally don't have any New Year's resolutions except for do better. That, of course, makes every motivational speaker and all of their followers just, what do you mean do better? Needs to be more specific. Write them down. Put them on your wall. Speaking of doing better, oh man, what a great segue into my first story. There are some companies out there who need to do better. Washington, D.C. Attorney General Karl Racine and 20 other state attorney generals wrote in a December 21st letter that several mortgage servicers employed by FHA approved lenders failed to effectively apply loan modification options the FHA introduced in July. What mod do you say? Okay, well, the loan mod allowed qualified borrowers to reduce their principal and interest payments by 25%, and it was envisioned to especially help low-income households, first-time home buyers, and households of colors that have been disproportionately affected by the pandemic. But the program can only be effective if loan servicers are actually implementing it. The article that reported this didn't exactly specify who these mortgage servicers were, but this is a pretty big deal. Mortgage lenders have done a lot of work in the past 10 years to regain the trust of the general public since the financial crisis of years past, and this sure feels like a really big setback. So yes, in a lot of ways, do better. Okay, this one isn't exactly huge news well, it is huge news, but a lot of the industry's already heard of this one. So this story is really for the potential borrowers out there, the potential homeowners out there. The Federal Housing Finance Agency, the FHFA, introduced new upfront fees on last Wednesday for some high balance and second home loans sold to Fannie Mae and Freddie Mac. Oh my God, what does that even mean? What? I have no idea what that means. Okay, so follow me closely here. These fees are created to help strengthen the government-sponsored enterprise's safety and soundness and ensure access to credit for both first-time home buyers and low/middle income home buyers. Okay, so how do these fees exactly help though? Well, it allows these enterprises to better achieve that overall mission of producing equitable and sustainable access to home ownership while improving their regulatory capital position over time. It sounds like a lot of jibber jabber, if you will, but go ahead and listen back to it. It makes a lot of sense. But look, better access to credit for first-time/low to mid-income borrowers and be safer, that's big brain. Hey guys, thanks for joining me on this week's episode of This Week Today. I know it's a little bit less fun than talking about what holiday spending and stuff was like, but look, this year a lot of stuff's gonna go down. All right? Some weeks aren't going to be full-on bangers. See you guys in the next episode.